So in this video lecture, we will talk about incidence of a tax. So what is this incidence now? So now there are two sides of the market. One is your buyer side. The other is your seller side. Now the government has two options. Either it can impose a tax on the buyer or the seller, right? So there are two options. Whether you want to impose tax on buyers means tell the buyers you pay this much tax, or tell the sellers you pay this much tax. So now when such a tax is imposed, we analyze two cases. First, when the tax is imposed on sellers, and the second, when the tax is imposed on buyers. So the government kicks in. So it's like a unit tax. So it's not that it's a proportional tax. So government imposes a tax of 0.5 cents on the sellers, say. Suppose government is telling the sellers that please give me a tax of 0.5 cents, no matter how much you are producing. It doesn't matter you produce 100 units, 200 units, you pay a tax of 0.5 cents to me. Now, when a tax is imposed on the seller, as you can see in this figure, these figures have been taken from ManQ. So the supply curve shifts leftward. Why leftward? See, because for every price, right? Earlier, what was happening for this much price, the seller was producing this much quantity. But now, if this is the market price, out of this, he also has to pay a price to the government, a tax to the government. So he will produce a little less. Or you can say, if you want the seller to produce the same quantity, you will have to pay a higher price to the seller market, because out of this price he also has to pay a tax. So his opportunity cost for production has increased. So this is the first thing, that your supply curve shifts leftward. Now, initially before the tax, the equilibrium was that the price was $3, right? And the equilibrium quantity was $100. Now, after the tax, this new point becomes the new equilibrium. At this point, if you see, the new market price is 3.3. This is the new market price, or this is the price that the buyers would pay, and the quantity gets reduced to 90 quantity ice creams. Now, let's analyze the wedge that is created between the price that the buyers pay, the sellers receive. If you can see in the diagram, there is this wedge that is created. So the price that the buyers pay and the sellers receive is different. So let's try to understand that what we are trying to say with this. Just a minute. So now let's try to understand the wedge first. So in this case, the new market price, PM, in the market is $3.3. So now the buyers have to pay the same price. Why? It is the market price. Now sellers also receive the same price, but now what happens is, since the tax is imposed on the sellers, the government comes in and says that you pay me certain amount of tax. Now the distance between the old and new supply curve is nothing but 0.5 cents, that is the tax. So if you just move to the old supply curve at the same quantity, 90 is the new market quantity. So you will notice that at the same, the price without the price, that is 2.8. So what happens is, out of this 3.3 that the buyers pay, the sellers pay how much? 0.5 cents to the government. That is, if you move down the curve on the old curve, that is $2.8. So this much rupees is left with the seller. So what we see is that the sellers eventually receive a price of 2.8. In this case, let's analyze what are the burdens. Economic burden means how much tax is borne by both the sellers and the buyers. So now, earlier, sellers were receiving how much price? $3. Buyers were paying how much price before the tax? $3. Now, after the tax, the sellers are receiving how much tax? How much price? $2.8. The buyers are paying how much price? $3.3. That is the market price, right? So if you see that the buyers are paying a higher price now in the new case. So if 0.3 is the price, higher extra amount that the buyers are paying, so this becomes the burden on buyers. On the other hand, sellers receive a lower price, that is by 0.2. So this becomes the burden on the seller. So what is the crux? What is the paradox in this is if the tax was imposed on the sellers, but what we see is what is ultimately happening is that buyers are also paying a higher price. So that means a part of the tax is shared by the buyers. We see that the buyers have to pay 0.3 cents extra. The sellers are receiving 0.2 less than previous. So we say that both are getting some amount of burden in the market. So this is how your legal incidence is completely on the sellers. However, the economic incidence is like this. This is how the economic incidence is shared between the buyers and the seller. So a same thing happens when tax is imposed on buyers. So let me run you through this quickly. It's just a replica of the other thing. Similarly, demand shifts leftward in this case. Earlier, initially the market price was 3. That was the price received by sellers, and the price paid by buyers. And the quantity was 100. After the demand shifts, if you can see the red line, this is the new equilibrium. When this is a new equilibrium, the market price is now 2.8. The market price now is not 3.3. It is 2.8. Now, if this is the market price, obviously the buyers would pay this price and the sellers would receive a market price of 2.8. But after buyers pay this market price, now since the tax is imposed on buyers, they would also have to pay 0.5 cents to the government. And if you want to add to 0.5 to this, you just move to the old demand curve, and that gives you this 3.3. So essentially, the market price that the buyers have to pay in this case is again 3.3. Now let's find the burden in this case as well. The only thing that is different from the first and the second case is the market price, right? Why? Because here the equilibrium is 2.8, right? Now let's calculate the burden on buyers. Earlier, before the tax, buyers were paying 3. After the tax, the buyer are paying 3.3. So that means the burden on the buyers is again 0.3 cents. Then again, $0.3. Then burden on sellers is 0.2. Why 0.2 in this case? Because ultimately what is happening is earlier sellers were receiving 3. Now the sellers are receiving 2.8. So they are receiving 0.2 less. So what we see is that the burden in both the cases is same. So that proves the fact that no matter whom do you divide the tax, the economic burden remains the same. On what factors it depends, we'll discuss it in a different video, but it depends on the elasticity of demand and supply. So it doesn't matter ki tax is imposed on buyer or seller, but the economic burden is same. So legal incidence has zero implication for the economic incidence. That finishes the topic. If you have any doubts, do let me know in the comment section.